Next up, we're going to be looking at deductions. The first deduction is OASDI. Figure 7.3 in your book gives us the OASDI rate for the employee portion of 0.062 on the first $142,800. In this spreadsheet, if you click on the Employee Earnings Records tab, there's going to be a record for each employee. Bono is listed first. In the cumulative earnings column, the year-to-date amount prior to this pay period is $10,293.40. During this pay period, Bono earned $1,408. The cumulative earnings before this pay period plus the earnings from the pay period is below the threshold of $142,800. This means that all of Bono's earnings will be subject to the OASDI tax. In the Payroll Register tab, scroll over to the taxable earnings column. You'll enter the taxable earnings of $1,408, and you'll multiply the total earnings of $1,408 by the rate of 0.062 to arrive at the OASDI tax of $87.30. Remember to check each employee's cumulative earnings to be sure that no employee has exceeded the threshold. If you refer back to figure 7.3 in your book, you will see that the HI rate is 0.0145 and that all earnings are subject to the tax. In the taxable earnings column for HI in the spreadsheet, you enter the total earnings of $1,408. Because there is no threshold for HI, the HI taxable earnings column will always be equal to total earnings. You will multiply Bono's regular earnings by $1,408 by the rate of 0.0145 to arrive at an HI tax of $20.42. The next deduction column is FIT, or federal income tax. Figure 7.3 says to use the wage bracket method to calculate FIT. Let's use Bono as our example. The payroll register tells us that he is married, and we know that the employees are paid biweekly. Turn to the wage bracket tables section in the back of your book and find the table on page T7 for biweekly payroll period. Look in the column for married filing jointly, standard withholding, and the row for at least $1,400 but less than $1,420. The tax will be $44. The next deduction column is SIT, or state income tax. Figure 7.3 says the rate is 0.0307. We multiply Bono's total earnings of $1,408 by the rate of 0.0307, and the SIT is $43.23. The next deduction column is SUTA, or state unemployment taxes. Figure 7.3 says the employee rate is 0.0006. You multiply Bono's total earnings of $1,408 by the rate of 0.006, and the SUTA is 84 cents. The next deduction column is CIT, or city income taxes. Figure 7.3 says the rate is 0.038712. We will multiply Bono's total earnings of $14.08 by the rate of 0.038712 to come to the city income tax of $54.51. Group insurance will only be deducted from the last paycheck of each month. The rate is 30 cents for each $1,000 of coverage. You can find the coverage for each employee in Figure 7.2. For example, Bono has $55,000 in life insurance. If we divide $55,000 by 1,000, we arrive at 55. You'll multiply 55 by 0.3 and arrive at a deduction of $16.50. The next deduction column is for union dues, and the book tells us that Bono and Ryan are union members and that $8 should be deducted each payday. The company will begin offering Simple on November 20th. Be sure to consider that these contributions are excluded from income for federal income tax purposes. Also note that you will not be required to account for the employer match. The accounts payable department will process these payments.